like to do just to kick us off is 30-second introductions. Who are we? How do we spend our time? Daniel, I'll start with you and we'll head down the line.
Yeah, thanks. Daniel Major. I'm the CEO of GoVX Uranium. I spend my time developing uranium projects in Africa.
Perfect. Thank you, Daniel. Fabi.
That's 3 or 30 seconds? I'm confused. So I'm Fabi Lara. I'm basically just like you guys, a speculator who started a bit too early in this trade and has finally been proven right, at least with this thesis. I also am the creator of The Next Big Rush. It's a media and marketing brand in the junior mining space. And I write a daily newsletter of what happened in mining today so that you don't have to go through hours of going through different headlines. You can just go to The Next Big Rush and then just see what's what today.
Yeah, excellent programming, by the way. Lobo, over to you.
I'm Lobo Tiggre, also known as Louis James from my Casey research days. I'm the independent speculator. I spend my time kicking rocks and raining on the parade of irrational exuberance. So I'll be the bad guy today.
Man, but I love you for
separately.
it. It's really important to have a bad guy.
That's why we put him over there.
Yeah, exactly. All right, so Fabi, I have to start with you because last year on this panel, on this stage, we were talking about uranium and you said, I'm mortgaging my house to buy uranium stocks. Now,
that is actually not true. You can go back and see it. I didn't say that.
But obviously you were heavy into the trade, right? So I want to start here. It's been a crazy year for uranium. And it's been a long time since uranium's had a year like this. I just said when I introduced the panel that Rick Rule's been on this stage every year for 10 years telling the audience that, look, either the price has got to go up or the lights are going to go out. One of the two things has to occur here. And now the price is going up. So starting high level, macro outlook on the uranium sector, what are your thoughts right now?
So one of the questions that I'm hearing a lot is, okay, the trade is happening. Is there still time, to jump in? And people are kind of getting a little bit nervous about it. What I'd like to refer back to is the fact that, yes, uranium, the commodity, is finally at triple digits, which I believe is a 16 or 17-year high, which is great, awesome. But the issue is that the equities have, by and large, not reached their 2021 highs. So on a macro level, I look at the commodity itself versus the equities, and I ask myself, when have we seen a commodity bubble where the highs of the equities peak, and then 2 years later, the commodity goes up, and then it probably keeps going up, which we'll probably touch upon soon, and then the equities all just kind of die off. Obviously, some companies are doing really well, but by and large, we haven't seen the mania yet. So I'm looking at this market, and every time we talk about, hey, uranium is finally working, yes, the commodity is working, the equities are lagging, and I think there's opportunity there.
And Daniel, I want to pass the same question to you, but from the company builder standpoint, industry fundamentals, what should people be paying attention to right now?
I think the price has moved. We've seen that, but it hasn't actually dealt with the issues that are actually driving the market in the first place. We've still got a long way to deal with the fundamental reason of why uranium is up where it is. And it is a long-term problem. We're massively underinvested from an exploration point of view. We are 1/3 of where investment levels were back in 2007 and 2008. We're looking at this last year, 75% of all uranium came from producing mines. By 2040, producing mines will only account for 20% all uranium produced. The rest has got to come from projects that haven't been built yet. And we know in our industry, projects always have a high level of risk of actually not arriving. So that fundamental issue is coming through. From a supply point of view, we're dealing with a problem of bifurcation out there. It's massive. If you look at the largest growth rate out there, it's China. China's going to go from a demand point of 11,000 tons of uranium a year last year. By 2040, it needs 44,000 tons of uranium. Its single source at the moment, or 2 points, Kazakhstan and Namibia. Kazakhstan's coming to the point of plateauing out of what it can do without going forward, which means where does the single growth player have to go to get its uranium? It can't buy from Canada, it can't buy from Australia. So like many other commodities, we're now getting competition globally about where does your source material come from in a situation where you need projects to build it. So we need higher prices still, but we need projects to come through. Massive risk if they don't get delivered on time.
Okay, thank you for that, Daniel. And thank you, Fabi, for the distinction between the commodity price and the equity price, often not correlated, right? Lobo, similar question to you. I'm wondering if you have some rain for the bull parade, but we'll get into the investment opportunity in a second, and I got a bunch of questions for you, but for now, on the macro standpoint, do you agree with this sentiment, or do you think the commodity price itself is running away a bit too hot, too quickly? What's your take?
Well, a year ago, we would have said the incentive price would be 70, 80 bucks. So at 106, chart goes like this. How long can any chart go like this? Sorry. Now, I say this lovingly as a bull. I'm a uranium bull. I'm a multi-year, maybe multi-decade bull, as for what he just said. I agree completely. But the chart just went like this. Don't let that go to your head. And so the answer is a little bit more nuanced. My concerns are just this year. Like going forward, uber bull. This year, high prices, do what? We have the low-hanging fruit coming online, and yes, everybody's talking about Kazatomprom saying, well, we may not be able to ramp back up as much as we want, but it's not, we're gonna produce less, it's not ramp up as much as we thought, maybe. And we have the low-hanging fruit that's being built. There are mines that are coming online now. And my big concern is, and by the way, I think even all that low-hanging fruit, even if Kazatomprom and Cameco went completely nameplate, and the DASs of the world and the bosses of the world, if they all deliver, I actually still think that's not enough to meet the demand. But there is this new secondary source of supply. All these people that bought at $30, $40, $50, you bought at $50 a pound as an institution, and now you're sitting on a double. You didn't buy this like Sput to sequester it forever. You bought it to buy low, sell high. What are you going to do when you're sitting on a double? I am not saying the uranium price is about to tank. I'm saying there's a new variable here. This has never happened before. We don't know what will happen. I don't know how much of the secondary supply will come onto the market. But it is a variable for this year. So all I'm saying is don't mortgage the house. Don't let irrational exuberance carry you away. I am a bull, but remember, you don't want to be a blind bull. There is a sword behind that red cape.
Okay, I appreciate that. And you're often the guy on Twitter calming that exuberance down. It's like Lobo by the dip Tigre, right? And so is now the time, therefore, for investors to just hit the brakes and be patient, because there's a lot of folks, right, that are scared of missing the train, right? FOMO is powerful.
No, FOMO
really
is
powerful.
Never a good idea. I mean, the chart just went like this. That is never, okay, it could go higher, right? If Kazatomprom really falls on its face and Greta Thunberg gets out there and says more pro-nuclear things, this could become the flavor of the day. We could be $150 by mid-year. That's not a promise or a forecast. I'm saying that could actually happen, right? In a world that could happen, you don't want to be short. But the chart just went like this. If you're long already, don't mortgage the house. That's all I'm saying. Have a sense of proportion here. And if, as a cautious speculator, not a wild gambler, I would look for the dip. We have been for 5 years in a 2 steps forward, 1 step back, sawtooth pattern. We've just seen a massive step forward. The history of the last 5 years, the history of this bull market is that there will be a dip. So that's when I would look to deploy personally.
Okay. And any comments on that sentiment, Fabi or Daniel?
I think my only comment to that, being a developer, I'm actually looking at the long-term price. And the long-term price hasn't moved yet. It's still stuck at 68. Well, interesting to see what happens at the end of this month. That's really is the price that underpins the market and development. And you're right, the spot price has really run. I mean, I was doing an interview at the beginning of the year, it was like 90, and I said it'll be 100 soon. I didn't realize it would be 4 days later. So, So I agree with some of that sentiment. There is going to be some volatility out there. One thing about the spot market as well, the volumes are so small trading in it going forward. So you will see that natural volatility coming through. But that fundamental underlying number that we're looking at, which is that long-term price, has yet to move. And that really is what drives us developers forward.
So I think at the COP28 summit, 20 countries pledged to triple their uranium output by 2050.
2050, rush!
It's so I want to pull that apart a little bit.
I think you actually mean they're going to triple their nuclear generation, not their uranium production.
Yes. Okay. So
slightly different.
My question is there any? I mean, it's easy to make promises for 2050. We've witnessed that in abundance over the last few years on the renewable energy trend. But is this enough to really drive the sector forward? And is it a valid promise? And do you think it has legs, Fabi?
Super long term, yes. That's not really the thing that excites me. I think it's a good signal to say to the young generation, look, we're going the way of more nuclear. This is a safe technology, and we're going to be all right for our energy needs. I think in general, it's good for the market, and I think it's healthy that they're looking out to 2050 and saying this, and not just going crazy trying to fix everything too quickly. What really excites me about that is that all of these countries are coming together and saying, okay, you guys have won. It's a good technology for power generation. Therefore, the power plants that were going to go offline, maybe we can extend them. And that's what's been happening. What really excites me is every single time there is an extension, then the fuel buyers go, oh, okay. We were supposed to shut off in 2 years. Now we're going to extend it for another 2, 5, 10 years, whatever the timeline is. We're going to have to buy more fuel. So they buy more fuel today for the extension. So I think it's not about the numbers that we're going to get eventually, because we're growing anyway naturally. It's about a change of sentiment coming from these nations that says, very likely, whatever we were going to shut down won't be shut down anymore.
Okay. And
Sorry, let me just jump on that, because Fabi, I think, hit on
Please.
something really, really important for everybody. Because one of the big sort of poo-poos here is, oh yeah, 2050, right? That's so far in the future, it doesn't matter. Or okay, they approve these new power plants. They take 10 years to build, and there's cost over and all. But what Fabi's talking about is something that changes now. If you extend the life of an existing power plant, it changes the demand now, right? And the other thing, you started with Rick, the restarts. That was his big thing, the Japanese restarts. That changes the market balance now, not 2050, not in 2030, but now. So this is important. So for all my rain on the parade, this is part of my bull thesis.
Yeah. So when it comes to capital allocation, this is an investment conference. The trade show is full of 247 junior mining companies. Not very many uranium companies, though. Maybe half a dozen right now. It's far fewer to choose from. How should investors begin valuing a company? What should they look for? What are the red flags they can identify right away and avoid? I'm probably going to hit you with that one, Lobo. But where should investors look for value right now? And Daniel, I'll start with you.
I think from the developer's point of view, you've got to look at the companies that can actually deliver on their projects. This is an interesting, while most aspects of our industry are pretty the same as any other commodity, uranium is it brings with it a whole bunch of other different risks that are associated with radiation. But also look at projects from a technical risk point of view. And I pointed our own project in Zambia. It is a straightforward open pit project that goes straight into the same process plant that you would have in an ISR mine. It's that simple. You compare that to the deep level uranium development projects you've got here in Canada, which if they go wrong, even by the smallest amount, their impact on the market is massive. So projects like ours, which are really easy from a capital allocation point of view to put together, we're working in Africa, the permitting is relatively straightforward. Focus on those that can get built and have a lot less risk of not getting delivered versus the highly technical projects that, while they look expensive and highly valued already, come with a lot of risk when they go wrong.
Fabi, same question for you. What end of the risk spectrum are you looking at right now? And what style of company are you allocating capital?
So I like anything with a resource. There were many companies, and there's still many companies out there with resources that were not economic at 20, 40, 60, but at 100, fingers crossed if this is sustainable, all of a sudden they're starting to look a lot more than zero. And I think that people haven't caught on to that yet. Later stage development is also interesting again, finally with this re-rating of the price. I wasn't too keen on the developers for a while there because, I thought that the market had caught on. They looked at the financials. A lot of some production was expected. And, there wasn't much upside to the numbers that we were seeing these companies put out. So everything would have to work out really well for you to make some money maybe when the price went up. Now the price is up. Which is significant. And so you have to go back to the feasibility studies that these companies have put out. And, what looked like 75 US dollars per pound, like maybe someday we'll reach there. It's like, okay, you can maybe contract at this level nowadays. So.
Dan,
just on that, if you put in, I get often asked what our projects are worth, priced in now. At $90, I've got $1 billion of MPV on my two projects. So even if you take the one out that's in Niger for nothing, you're still getting Zambia really cheap from a value. And as I said, it's a really simple project, and you get the other project for free.
Okay, I love that. Thank you. Lobo, same question over to you. Where are you looking to allocate capital right now? Are you? And if so, what are you looking for?
Well, I'm long already. I like the development space in particular. A claim to fame, if I have one in the mining space, is my work on the pre-production sweet spot. And we've had a couple more cases in the last few months of successful PPSS plays. And that's really important because most PPSS plays in the database are gold, silver, and there were a few uraniums in there. So we've had some confirmation of this thesis, of this ramp up through the pre-production, the end of the Lassonde curve. So that's good to see. It really does work for uranium as well. And there's more of these out there. So I'm looking for a credible, robust feasibility study at a price that's below the accepted incentive level. So let's say you have a study that's 2 or 3 years old and it says this works at $70. That looks great at 106. But the costs have moved since then. I'm much more excited about a robust feasibility study that worked at 35, 50, something like that. And there's a few of them out there. Even if costs have gone up, I'm less worried about that in a robust study. And we have seen PPSS plays in this space deliver in very recent memory. So I really like this a lot. There's not a lot of them, but there are some. They're happening now. If we get a correction and we get a lot of this has been priced in. The obvious winners in this space, we talk about, the stocks aren't as well as they were in 2001. By the way, in 2001, I rained on the parade as well. And people are like, he's got no conviction. He's talking about taking profits. We're just getting started. Why is he talking about taking profits? Well, because market's correct. And there's people that still, whine about, the stocks aren't as where they were in 2001. Yeah, but if you took profits in 2001, you're okay. So I'm looking for, hopefully, as a buyer, a correction to back up the truck on the pre-production stories. Exploration, I like a resource. I want high margins if I'm going to go there. I'm not confident that Greenfields is going to make it in this cycle. There's a lot of uranium out there. Our good friend with the 1 billion pounds of uranium that's just waiting to flood the market, right? Yeah, Greenfields is a bit of a stretch. So I like the pre-production sweet spot. I'm okay with producers that are ramping up or going places. But if you're a producer, I want to see profit. Okay, maybe your first startup quarter, you've got extra costs and things. But once you're up and running, you're a producer, you're supposed to make money. If you're not delivering to the bottom line, that's a cardinal sin in my book.
So we heard, management from Daniel, resource from Fabi and Lobo. None of you mentioned jurisdictional or geopolitical risk. So I want to ask about this. Do you factor that in? Are there jurisdictions you want to stay away from? Are there some that are more favorable? And when you're in a risky jurisdiction, how do you price that in and how do you manage that?
I'm sure Daniel has zero stories about that.
Daniel, would you like to go
Or
first?
jurisdictional risk. Yeah, I mean, look, you've got to take into account, and that's one of the reasons why, for those that don't know, my company happens to be in Niger, where we had to deal with a coup last year. And we're still sitting there. I mean, that's a much more complex issue. I mean, in Niger, we have a geopolitical fight now between the West and the East on who wants to control the Sahel. But that's why in 2016 we went out and diversified as a management team and said, look, we need to have growth. We have to have new projects, but we also have to diversify. A jurisdictional risk comes in many different ways. I mean, I can permit a project in Africa very quickly. It takes a lot longer in other jurisdictions. And if you're having to put out funding for 6 to 7 years, even when the uranium price is high, because you've got to go through a massive ESIA problem, that's risk that you've got going through. If you can get it in 4 months and the uranium price is already up, that's a completely different risk scenario. Africa's straightforward. Africa comes with another benefit, which is it can sell to anybody in the world who's allowed to. So I can sell to China. I can sell to the largest growth market in the uranium market that's going out there. That is a positive for me. I can also come into Canada and this part of the world. So that is a different way of looking at it. But look for diversity as well if you're going to go into jurisdictional risk. But it doesn't just mean you can get Starbucks.
Yeah, right. Okay, so it's a tricky situation in Niger. You're managing it and building in optionality into the company. But what is your take on the coup in Niger? I know some people are going to want to know from somebody with boots on the ground, not media headlines. Daniel, what's your take on the situation?
Another half an hour? Yeah, I mean, look, it's a coup that should never have happened. It wasn't being expected. It came out of nowhere on us. It's turned into, and it wasn't a Russian coup. This one was an internal issue that was going on, but it is now turning into a much more geopolitical scenario. The local government is trying to figure out who it wants to partner up with. The US particularly is very aggressively courting the government, and it's courting the government with US dollars and wants to be able to develop. It's protecting a drone base. The government is trying to go around and see if there's another party that will give them more and not having much success on that basis. But this is a bigger geopolitical play. We've seen the collapse in Mali, collapse in Burkina Faso. The last thing anybody needs is Niger to follow the same route, because West Africa will fail. And if West Africa fails, that's sitting on the border of Europe. So this is a big geopolitical play. The Americans are very keen not to see it go down that route. So,
okay. Yeah, no, I appreciate that. Thank you. Fabi, similar question. Do you factor in geopolitical and jurisdictional risk? And if so, how do you price that into the opportunity and evaluate that risk?
Well, you almost have to, because what seems like a good jurisdiction may not, and things change really quickly when it comes to mining. I usually think of mining jurisdictions in general as there are no good jurisdictions, because the moment that you kind of sit on your laurels and think, this is a good jurisdiction, I'm going to go all in, I'm going to focus on only one jurisdiction, that's when it bites you. That's when something comes out of left field, and then guess what? You could be invested in the right thesis and you can make no money. In fact, you can lose a lot of money by just having that opportunity be stolen away from you. And so, for example, I had my doubts as to whether the US would be producing today. I always knew that eventually there was going to be a renaissance. I thought it would maybe start at $100 level, and we had companies that have come out and announced that, hey, we're turning back some production. Obviously, this is smaller scale production. I thought it was going to take a lot longer, so that surprised me to the upside. But it usually doesn't happen like this. It's usually a bad piece of news that comes out of nowhere, and you're like, oh, maybe I should have invested a little bit more in a few different countries to make sure that, it covers my bases. So it's good to have a little bit of, exposure to the US, Canada, Africa. I have a little bit of everything.
Lobo, anything you would add on top of that when it comes to geopolitical risk?
Yeah, one, there's no way to discount for it. No there's no formula here. There's not a 32.5% discount for that. I mean, forget all that. Either you're comfortable with political risk in a place or you're not. If you're not, just don't go there. Our good friend Rick Rule likes to say, it doesn't matter the color of the skin of the person who robs you. You're still robbed. It's true, it's a noble sentiment, but you know what? You don't typically get shot up with an AK-47 on your way home from a mine in Saskatchewan, right? So I am personally willing to pay a bit of a premium for a jurisdiction that I feel safer in. That doesn't mean I'll chase it. I'm not going to overpay. I always want a discount. But I do think it is worth, make that decision. Understand if you're going to invest in AK-47 Central, there's a chance that you may wake up one morning, there's a coup, or worse, there's a physical safety issue, expat shot or something like that, and your stock falls off a cliff. Don't go there unless you're willing to accept that risk.
Daniel.
I just got one comment to that because, I used to be an analyst as well. There is a point in all of these things where you have valued in that risk position. So if you look at a company like ours, you're trading at like 15 cents a pound in the ground with a project that can build. When is that not cheaper than someone that's trading at $5 a pound in the ground?
No, I get that. This is
so it's not just out.
I hear you.
Where's that balance of risk?
This is a Doug Casey thing. At some point, price trumps risk, right? So if I can get something even in Mali or Burkina Faso for 5 cents on the dollar, okay, there's a value proposition there. But still, if I'm not willing to wake up and read that the chief geologist has been shot, I'm just not going there. Sorry.
Okay. Fabi, I want you to comment to anybody who is in the uranium game right now. And, okay, so I think you tweeted recently, taking a double is an easy way to miss out on a 10-bagger. And you add a lot of humor to your content, so it is for what it is. But I want you to talk about scaling out of a position, right? When you're up, you've taken some profits, you want to protect your earnings, right? Everybody wants to hang on for the whole ride, but selling is the harder part of the trade, in my opinion. Buying a stock's super easy, right? When you're up or down, getting out's a lot tougher. How do you process exiting a position?
I make sure that my entries make up for my sins before I need to exit. So I try to be really disciplined when I buy a stock because I know I'm not going to exit like a lady. I'm going to exit in a way that I'm going to miss the top and it's going to hurt. And so what I can control is how much I pay for the stock when I buy it. That's what I focus on primarily. But also sometimes you look at a stock and it's, it has maybe more momentum than its peers. And sometimes there's no rhyme or reason or catalyst behind it, or you see that, the company's out there promoting more, and then you're like, this is not sustainable, I'm gonna take some profits, and then take some profits. But, I like to leave something in there. I like to take some of the profits and leave some in there to make sure that, I see it through if I think that the thesis itself still has legs. So it's not an easy task whatsoever, but, I try to compare it with what are the other stocks doing right now, and is this sustainable compared to where the commodity is at right now and where I think it's going? And then it's a guessing game.
And Lobo, same question, I want to leave it with you. You've been in the game a long time, so I'm sure you've made the mistake of holding on too long, I might guess. What kind of counsel would you have for the audience?
It's funny, I remember the agonized emails from back in my Casey days. People understand, we're big boys and girls here. You can win or lose. You lose some, you win some. People are okay with that. But if something really takes off, and we followed Doug's formula of sell half on the first double, people hated that. Like, it was agonizing to see a 10-bagger turn into a 5-bagger. 5-baggers are not bad. But you take all these risks, and you finally get the mythical 10-bagger or whatever, 20-bagger, and it's half. And you say, So I've adapted this. I call my strategy the upside maximizer. I use something like a trailing stop, but it's not a stop loss. It's to lock in gains. So instead of selling half on the first double, I let it ride until it rolls over. And then I take my profits. So that way, maybe my 10-bagger doesn't turn into a 5-bagger, but maybe a 7 or something. Like, you see what I'm saying? I just let it ride. If it's got momentum, as Fabi's saying, why am I going to go ahead and take profits? I'll let her rip as long as she'll go. But once it's going, it's going rolling over, and I've got a big win, the worst thing is when it slips through your claws. Sorry, I'm a wolf. Claws. So yeah. Audience participation, I like it. I think we're short on time. Just don't let a big win turn into a loss. Nobody loses money. Nobody goes broke taking profits.
No, don't take the round trip. And you mentioned the selling half on a double. That's I think he coined it the Casey free ride. Maybe he didn't coin it, it's been around a while, but selling half on a double is essentially withdrawing your principal. Whatever's left in there is therefore risk-free upside, right? Whether it goes up or down, you got no skin that you didn't have initially. Okay. I want to thank you all for joining me on stage today. Thanks for your time. All three of these individuals will be on stage in a workshop as well, so check out those presentations. Let's give them a round of applause. Thank you.